76% of Americans live paycheck to paycheck. Is that you? I'm the CEO of 5 different companies. I wasn't born into it. We lived on welfare, but I wanted more. I created this show, The School of Wealth, helping people escape poverty like I did. I want to help you out of that consumer debt, teach you how to increase your credit score, teach you how to make more money at your current job or your current business, and then how to actually create generational wealth without changing your lifestyle. It is going to be a lot of fun. This is not like regular school. Hey, I'm Rondi Lambeth, and this is the School of Wealth. Hello and welcome to the show. I'm your host, Rondi Lambeth, bringing to you another great guest. I'm super excited for the guest I have today. Let me put my Clark Kent reading glasses on because a man my age, I'm having a hard time reading now. So anyway, my guest today is the founder and CEO of Activate Group, Inc., a best-selling author, serial entrepreneur, and that specializes in liberating C-suite teams from barriers holding them back personally and professionally. And he's owned several companies. He sold several of his companies, and he's worked with numerous top Fortune 500 companies, training performance-enhancing organizations like Scaling Up and Gazelles, which you're going to have to explain what that is, because honestly, I've never heard of that. And he's become a very sought after business mentor, executive coach, and keynote speaker. I've seen him speak now over the last 4 years, probably 10 times. And I really enjoy his presentations. And his clients that he works with and helps either have family-owned businesses, multinational companies, public companies, private companies, ranging anywhere from $1 million in sales to over $1 billion in annual revenue. And he's an expert keynote speeches on, he does expert keynote speeches on employer empowerment, cash flow enhancement, which I'm going to love to talk to you today about that, cash flow enhancement, human capital. I love the way you say that, human capital, and then entrepreneur freedom and business growth. So with over 30-year track record of success, it is my pleasure to have Howard Shore on the podcast today. Thanks, Howard, for taking the time with us.
Rondi, I'm so happy to be here with you today.
Yeah, that's great. So you are in sunny Florida right now, aren't you?
I am in Miami, Florida, and actually we actually have a cool day today, which is super nice, but for most of the country, it's not so, it's still warm.
I saw that this morning. Scott Thomas, a mutual friend of ours, posted it was like 49 degrees, and I was getting ready to go out and do my 45-minute workout, and it was 19 degrees and foggy here in Idaho. So, but that's all right. So tell me, how did you get started with business? You've been doing it now 30 plus years. How'd you get started? What's your background?
Well, what's really cool is I grew up in an entrepreneurial family, and I was ADHD, sleep apnea, severe ADHD. I had Coke bottle glasses. If you go back, and actually also had sleep apnea, so I used to fall asleep in class uncontrollably as a kid. So as you can imagine, I wasn't the best student in the world. Later in life, I figured out how to study, but up through high school, I was definitely not winning any awards or getting on any honor rolls. So when I decided, even mentioned to my dad I was going to go to college, my dad's like, we don't do that in our family. We own businesses. So I wound up buying my first business when I was 18, and it's amazing to have parents who are like, no, don't go to school, do this. And I eventually went to school, but it was because of that push that I'm like, all right, I'm an entrepreneur, I'm going to do this, and so that's how I wound up going in.
What did you buy at 18 years old?
So I grew up in the printing industry. And back then there was a segment of the industry called typesetting. It doesn't exist anymore. And I owned a typesetting and graphic design company, which we actually grew 100% every quarter till I realized the industry was going to die, because I didn't know about looking at industries or the future when I got into my first business. I'm just like, I just need to work, go make some money. I can make money anywhere. Got in the middle of that, and I realized because of the changes in technology, I was going to be dead in 5 years. So I decided to sell.
And that was your first business that you sold?
Yeah, when I was 21.
Wow. 21. Wow. How many businesses have you had so far over the last?
So I've founded or invested in 9 total businesses.
9. Okay. How many of those have failed?
Well, let's see. We got to define failure, right? So, but
Failed as in bankruptcy, quit, close their doors, or just shut down because they didn't want to file bankruptcy.
so I've been fortunate where none of them have failed, but I
Okay.
have had failures. So to me,
Okay.
if I invest in a company and I exit and all I got was what I put into it, I failed.
Yeah.
And I've had that happen. I've had other ones that, I got into them and I just realized I, I didn't love the business. We didn't have the right team and I didn't have my gumption behind it. And then I exited those. But almost, I think all of them are still active.
Okay. Awesome.
Yeah.
And the business that you have now, do you just have one now? I say just one. I don't mean it that way, but
So I'm
when you,
invested in several,
okay.
but in terms of my being active, as of this year, I just exited the software company I was in. Activate Group has got my sole attention so that I can grow this properly.
All right. So tell me about Activate Group.
So this actually happened because of, even though I didn't have on paper failures, if you go all the way back to, even that first business, I cringed when I realized how horrible a leader I was back then, and I didn't know what I didn't know, and through my course of time, I realized that there had to be a better way to leading businesses, and there had to be a better way, because the only reason I was successful is I just worked 3 times harder than everybody else,
Okay.
and I didn't like that formula. So after going through that, and I've done everything from I was in a $6 billion and $20 billion company at the executive levels and boardrooms, and I just looked around and I'm like, this can't be the best way to run companies. And so that got me passionate about, how do I become one of those guys, and how do I help other people become one of those guys that, works a third and gets 5 times the return. And that
Okay.
really became my mission in life. And so we really like liberating the ones that want, because honestly, there's a lot of CEOs, they love being workaholics. If you
Yeah.
found them free time, they just find another business to own and they'd fill it up.
Yeah.
But for the ones that do want to liberate themselves so that things kind of run themselves and continue to grow and they can just cash flow things, we help them figure that out.
That's funny because I was literally thinking about that. It was either last night before I went to sleep or this morning. And I try to meditate, visualize before I go to sleep, and I try to do it right when I wake up. I'll hit the snooze button, and I don't hit the snooze button on my phone to snooze. I do it to where if I fall asleep when I'm visualizing, it wakes me up, 7 minutes later.
Hmm.
And so I don't really know if it was last night or this morning, but I was on a call last week, and the guy was talking, he's in his 30s, and they were asking me like, what kind of balance do you have in your family time? And that's all it was creating a proper relationship with your family. And he's like, I don't have any hobbies. I work out and I work. I work out and I work. And I don't vacation. I don't do this. And I was thinking about that. And he was, you know, coaching us on that's what we should be doing as entrepreneurs. And I was thinking that's what I used to do in my 20s and 30s. I worked 7 days a week, sometimes 14, 16 hours a day. There was days, Howard, I remember in 2011 in San Diego that I would get up in the morning, get my coffee, drink my coffee, take a shower, go sit at my desk. And my wife at the time would bring me breakfast, lunch, and dinner. And then I would get up and then go to bed. And I would literally sit at that desk for 16, sometimes longer hours a day, 7 days a week. And as Brian was talking about this, I'm like, man, I used to do that. I don't want to do that anymore. And I see that as a failure in your business, that if it requires that you have to work 3 times longer than everybody else. And I think most businesses fail, even if they don't go out of business, even if they don't shut down. I don't know what the stat is now, but I remember, I think you were actually on the call, the Chamber of Commerce call that we had in April with Trey Taylor. Were you on that call when they were
I
talking
missed
about?
that one.
So the Chamber of Commerce said that it was like 47% of all businesses would fail and never reopen if they went more than 30 days being shut down. And then 88% of all businesses would completely go out of business if they went 12 weeks or longer with no revenue coming in. So I
I
think we're going to
remember that
see,
stat. I was there.
yeah, I mean, it was astronomical stat. But if you're listening right now and you're thinking, well, I've never failed at my business. Well, if your business is not profitable and growing without you being involved with it, I don't think that's a successful business. In my mind, it's not. I don't think it requires us to be involved every day. And if I'm right, that's one of the things that you do at Activate is you teach the CEOs and other C-level executives how to work on the business, not necessarily in it. Is that correct?
That is like spot on. And just to kind of be transparent with everybody, um, I'm even doing this in Activate Group for myself. So I used to handle 17 clients, which was insane, run around all over the country. I now never handle more than 5. And, my job has shifted to the point where eventually, I'm just going to be a thought leader and let everybody else go run around like maniacs, and I'll make money off of them.
Yeah.
And that's kind of the goal. But the other thing, so there were a couple of things as you were talking, um, it resonated, and I think there's some other stats for everybody to listen to here. I can't tell you, we turn down about 75% of the businesses that we meet because they're really not businesses. They're basically somebody created a job for themselves.
Yeah.
And even the salary they take out sucks, right? And these poor people have been working their bones for like
Yeah.
20, 30 years. And I'm like, that's it. I can't help you. If that's all you were able to do in 20 to 30 years, we're not likely going to be successful. Let me save ourselves from this trouble. But so many businesses, people look successful on the outside. They're making very, very little money. And they're always, and I can't tell you how many CEOs of even big businesses, they're always robbing Peter to pay Paul just to cover, their expenses. And meanwhile, they have what appear to be big businesses.
Yeah. So I have 5 different companies, and one of the companies I started in March, right before the shutdown. I'm now up to 88 referral partners, revenue partners, somewhere in that 88
Nice.
people that we've hired. And one thing I love about that business is the overhead it's like $5,000 a year, and you can make millions of dollars a year. This is my very first year in it, and I will make probably $350,000, $400,000. My overhead, literally all of my overhead, is about $5,000, maybe $6,000.
So you have no
That's
risk.
it. Yeah. And but I see that when I meet with people, whether it's business credit coaching or tax planning or retirement planning, we sit down with these businesses and we look at their tax returns, millions of dollars of gross and 100,000 of profit, if profitable, they're on a $8,000 a month salary and they got tens of millions of dollars coming in, and there's just so much overhead. And it's really sad that they work that hard. And what's surprising is how many of them don't read books, don't listen to podcasts, don't watch YouTube channels that teach people entrepreneur skills. And I think some of my success comes from, I'm an avid reader. I wasn't before, but I read every single day. I read 10 pages no matter what, every single day. And if you do that, it's 3,600 pages a day. I mean, 3,600 pages a year, which you can do about 12 books a year. So speaking of books, I know you've written some, which is why I wanted to segue into that. Tell me about your latest book that you wrote.
So the Leader Launchpad got written because I was doing what you do. So I probably finish a book every other week, and I was doing this forever. And then I started realizing when I went back in time how little I had actually implemented.
Yeah.
And I started looking at all the other leaders that read a lot of the same books I did, and they had not implemented what they at the time said, man, this is really good advice. You got to read this book. And they didn't do anything with it. So I said, what if I were able to take the concepts from over 50 business books, provide a system and actually just lay it out so you just have to read one book, get your MBA that you need for the business, and actually make it practical so you can implement one chapter at a time, several chapters, just work on strategy or just work on execution. But take all of those books, consolidate basically the cliff notes that you need of wisdom, and then get you running so that, because a lot of people aren't like us, they're just not going to do it. So how could I simplify it for them?
And that's Leader Launchpad.
The Leader Launchpad, yeah.
I'm
And
going to get
obviously,
that. Can I get it on Amazon?
You can get it on Amazon.
Okay, I'll go there and I'll order that. Yeah. So what I do is I actually only read I bet I only read maybe one book a month because I focus on the 10 pages and I highlight them and I have little stickies that I put in them and I really focus on implementing those 10 pages that day. Because I used to do that thing where I'd read a book in a day or 2 days and I wouldn't implement any of it because it's just overload, right? And I know some people do that. They say the average CEO reads a book a week. But again, to your point, you could read 50 books a year and not implement it. What good is it, right?
Correct.
So I'm going to get your book, The Leader Launchpad. You can get that on Amazon by Howard Shore if you're listening right now. And I'll put that in the show notes as well. So I look forward to getting that actually.
Awesome.
Good.
I can't
have
wait
you
to
read
hear what you do with it.
I'm totally. And so you have the chapter set up as an implementation chapter.
Yeah, essentially each chapter is a concept you need to implement.
Okay. Yeah. The last book that I had saw that you wrote was Leaky Buckets, I think.
Yeah, your business is a leaky bucket. And
Yeah.
so I think that one we need to talk a little bit because it definitely plays into the audience that should be listening to this. So one of the things that drove me nuts, so as I mentioned, I mean, here I am in $20 billion companies, $5 billion companies, I'm sitting around the room and I'm just like watching money disappear everywhere. We could have made so much more money in those companies I was in, but it was just bad leadership that was causing money to disappear. And and there's some reasons why that happens. So first of all, you know this, but the audience doesn't know this. I am a CPA. And one of the things I hated about accounting was debits and credits could balance, and then you go bankrupt.
Yeah.
and then the other thing that most people don't realize is the only numbers in your financial statements that aren't estimates is cash and debt. Everything else is a freaking estimate. And then the other problem with financials that most people don't realize is that it only captures transactions. And what I found overall this 30 plus years was many times there's a lot more money that's not getting into the financial statement than what's actually getting in there. And so that's what I called it, and I refer to them as the leaks. So for example, you don't have a line item in your financial statements that says I hired a dumbass. Right?
Yeah.
You don't have a line item in your financial statements. It says, listen, because I didn't figure out how to compete in the market, it's costing me 2 to 3 times more than it should to acquire customers. There's no line item for that. You just have the expenses that you expended. It doesn't show you what you wasted. And we've never gone into a business where when they get done, just I have a calculator that goes along with it. There's always at least $1 million on the bottom line. And many times leaders really struggle because the numbers that wind up on the bottom line that they would have in cash is sometimes 10 times. I'll never forget, I worked with a $250 million company that, by the way, whenever you go to a business and they're quoting you EBITDA, it means they don't make money, so they had to come up with EBITDA. So they
Tell
had
us what EBITDA is, because I know a lot of
earnings
people
before
don't know
interest, taxes, depreciation, amortization. So they're trying to get closer to cash,
that.
and they're trying to ignore the fact that they have all this depreciation of all the investments that they made in assets and equipment and facilities and all of that. But the reality is they did, and they're losing money. So this company was almost break even, and we got the team together, and one day we took them through the concepts of this book and just a quick calculator. One idea was worth $25 million of profit annually, just by getting them to stop failing to implement a process.
Yeah. And that's the thing. Most businesses don't have a process. and they don't really have a system. They truly are just a job. It's a
Hmm.
working job. So that's the second book is called what? Your Business is a Leaky
Your
Bucket?
Business is a Leaky Bucket, and actually 2.0 came out. I still don't have it in soft cover. That should be in the next few weeks, but it was time to update it,
Okay.
be relevant for the times, make sure the calculator's in there. So that one's out as well.
All right. Have you ever read Profit First?
I have.
Yeah, it's a great book. Yeah, that's something I recommend all the time on the show. So not to steal away from you, but I think if they read your books, they can implement that in there, because I was one of those guys that I didn't, I had so much money coming in, and I'm not saying that in an arrogant way. I'm saying it because I'm an idiot, or I was an idiot for doing this. I had so much cash that if someone said this is going to cost $100,000, I'd be like, okay, here's $100,000. And after reading that, I started implementing some stuff. And then over the last year or so, money was really tight with my divorce and then my buying out my partners. And so I recently purchased via lease 180, it was like $188,000 worth of equipment, copy machines, folders, inserters, stamp machines, the office stuff. And when I got that bid, that little voice said, you need to offer them less. Now, how much profit do you think was in that it was $188,000 total for everything. What do you think I could offer them and still get all the equipment? Copy machines, scanners, printers, and some other high-tech machines.
So typically a lot of that stuff, they have, 50 to 75% margins built in because they're selling it at market value.
So it was 188,000 was the bid. I got all of it for $95,000.
Yeah, because they still made 25%.
I was like, I cannot believe. And so that's that back to your book, your business leaky bucket. Like, how many times have I done that in my life now? And I just did it yesterday. We're going every year. I take my board members, which just happen to be some of my family members. We go somewhere every year and we do our annual meetings, and we actually work for 4 or 5 days. And so we chartered a private plane to go from the bottom of Costa Rica to the top of Costa Rica, which was going to be like a 10-hour drive. So I chartered this plane for all of us, and they immediately come out and it was like $4,000 or something. I said, well, can you do better? So we ended up getting it like for $3,000. It's the same plane, same pilot, same fuel. It's just they had an extra $1,000 of profit in there. So I like the idea of your book with pointing out ways that you can save money and then ways that you're losing money. Like we had a phone system that we implemented. We lost $300,000 on it, and we never activated the phone system. I don't even know how much we lost in other stuff. So I'm super excited to get your books and read them.
So there's two things that to kind of build off of that, and because you'll love these stories then. So the company that I was giving you an example of earlier, they basically emergency rooms outsourced to them to run their emergency rooms. And as you know, in the healthcare industry, it's all about checking the right boxes so that you get maximum return on investment from the insurance companies. That $25 million was because they were not checking one box that they earned across all their hospitals every single day by just checking. And I'm telling you, the CEO was so giddy in their daily huddle every day. They talked about, did you check the box? Did you check the box? I mean, it's a $25 million box. And then they found there were other boxes that they were just consistently missing because the insurance companies kept changing it. So many times people think it's a negotiation. Well, no, sometimes it's, you won't get paid enough. Most restoration companies, we do a lot of work in the restoration industry. Most companies, you'll see 5 people do the same estimate. It's almost like a tax return. 5 people do the same estimate for a job. You get 5 majorly different answers. And so in most companies we go into, they have, 5 to 10% more profit margin that they would already get paid for if they just knew to check the right boxes.
Yeah. Yeah. And I think that all comes back down to your operating system, having your operating system. And I know that's something that you have. Tell me another story. Do you have a super success story? If that wasn't it, if there's another one where you,
oh yeah, no, I mean, so
give me like something like unbelievable success story. I want you to brag on yourself a little bit, Howard, because I know you don't
So
normally do
there's
that.
two different types of successes. One of my favorite ones was this guy Floyd. We worked together for about 5 years, and when I first met him, he was this really young guy, started a business, was doing well, and actually, to his own chagrin, because he had as much profit margin as you did, he would just he would just spend the money on stupid stuff. Well, eventually, what we did with him, not only did we continue to double every couple of years, but his exit was he still owns the business, he still sits on the board, but he doesn't even work in his business anymore. He spends about a couple hours a quarter just being mentors to the leadership team we grew up and built, and he spends the rest of his time traveling, helping, and for him working and helping and influencing government was important to him. So I think that's like an awesome success. You've got a guy 35 years old, he's spending millions of dollars off his business every year and he doesn't have to work. I think that's like a huge success. And when I first met him, he was working a ton, right? And he was a slave to the business and no one could do anything without him. So I thought that was a great success.
Yeah.
And some of the other ones, I'm thinking about, Russ at Titan Restoration in Phoenix. It took him 20 years to get to $7 million of revenue, and while that's that's respectable, right? And he was doing well for his industry. He's really had kind of plateaued, and he was frustrated, just like we've all been there, right? How did it take me this long to get to 7 million, is what he kept telling himself, when he knew he could be a lot more. And over 3 years, we actually tripled that number. He actually set a goal to double it, and we tripled it. But more importantly, the average company in his industry makes 5% net. He made 25% net, so he was pretty happy.
Yeah. So what can you give us some advice for the listeners that are new entrepreneurs, existing entrepreneurs? What can they do today to make a difference in their business?
So it's interesting, because to me, you're probably in, we're all in like a same storm, is what I like to say, but different boats. So you've got some companies right now, they're restarting. Some are rebuilding, some are resuming, some are regressing, and some are booming, right? So they're exploding. And so depending on where you're at, I'm going to give you a different answer, right? So if you're regressing, you have a strategy problem. And if you don't, and many of the companies that are regressing right now were regressing pre-COVID. And so what you need to figure out is, what are you going to offer to the market that is unique and valuable to a customer set? And when you're struggling to grow, when you're regressing, what the market is telling you is, you may be good at what you do, but I don't care. You look like everybody else, or you don't even look good enough for me to talk to you, and you're going to work 2 to 3 times harder to grow. So for those companies, I'm going to say, get back to strategy. Don't blame it on your sales force that your strategy sucks. Yeah, and then you've got other businesses. I think what you did before is not going to get you to where you want to be next. And so take those early stage companies. So Ego did a really good job for us to have the gumption to start something new. Ego gave us the courage to do things that other people wouldn't even think about doing, right? And that ego is great, and it gets you to a certain size, but then you get stuck, because at some point you should no longer be the brain. At some point, this thing should be running without you. And so the skills that you could put everything on your back, work the 3 times harder like we did, no longer works. For those of you who are now getting to that, and usually it's somewhere around 3 to 5 million, you've got to start thinking about, how do I run my business differently? Because I've now earned the right, and now I need to learn how to actually have a business run itself, and just my really being a leader and a visionary and that kind of stuff. And so I think the early stage person, I think, they're going through that. I would think about that as well. The next thing I would challenge is, and this plays into a lot of what you probably preach a lot, is too many businesses, their overhead is growing at the same rate as their revenue. So overhead, folks, is selling, general, and administrative expenses. That is not supposed to grow as fast as revenue. When you talk about scaling a business, you're usually talking about scaling off of revenue. So your job and the challenge I want to put to everybody today is, how do you grow your business and not have to add an incremental same amount of employees? And you need to break that chasm. So you've got to figure out, how do I do this? How do I make more and not have to double my employees to double the size of my business? So I'm always looking at, where are we adding too many layers? Where are we throwing bodies at a real problem that needs to be automated? What do we need to do so we can get that scale? And then the other thing that I'm going to challenge people on is complacency. And we all suffer from it. You have a bunch of success, and then good is good enough, and that's going to get you crushed in the market. And so what I'm going to challenge everybody to think about is, am I just accepting mediocrity? So I'll accept some, that my employees are average, because it's a hard work to find not average people. So I'm just going to do that, but that's costing you a lot. So what areas of your business are you now accepting mediocrity because you're comfortable?
Yeah, that's so true. You need to get comfortable being uncomfortable, right?
Yes. And stay that
And
way and actually look at it as a good, right?
yeah, and that's the thing that I say all the time is, you can sell yourself out of business. And most people, and you brought it up, that they're scaling, but their overhead is increasing with it. And then if you have one bad month, the whole thing falls apart because your overhead stayed the same. And I see that failure a lot, that they sell themselves. Now I'm doing 2 million, 3 million, 4 million, but their expenses are growing with that as well. And I think a lot of it has to do with, they don't know how to read a balance sheet. They don't know how to read a profit and loss. And they just know all this money's coming in, but they're not focusing on what's going out. And it's not how much money you make that really matters. It's how much money you keep that matters. And I think it's just the average person in general. And I think it's part of our culture that we're taught not to talk about money. And so they don't even want to learn about it. And I talk about this a lot. And you said earlier that you're a CPA. I say this on a regular basis. Most CPAs are not who you need to hire when it comes to doing your taxes. That a CPA is a certified public accountant, not a tax professional.
Mm-hmm.
And I would like to know, would you do someone's taxes?
Hell no. Actually, you wouldn't even want
Right.
me keeping your books. It's not
Right.
my DNA coding, right?
Yeah.
I grow things, right? So in any profession, first of all, just because you have a designation, let's say HR is your profession, accounting is your profession, doesn't mean you're great at everything in that profession, right? You've got to figure out what is the superpower. And so all accountants aren't equal, all attorneys aren't equal. You need to figure out, which tool do I need out of my toolbox? And when anybody comes to me, they're like, man, we can do all of that. We can just do it
Yeah.
all.
Like
I'm running the other way because I'm like, I want to know what you're great at. I don't want to know what you're good at.
Yeah. So I say that on a regular basis. If you're looking to save money on taxes, it's your CPA is generally not the person you need to be meeting with. You need to find a tax professional. And then, like, I have a CPA. I don't even know his name, Howard. I've never met him. I've never talked to him. I don't know the name of their company. My tax professional hired him. They do my taxes though, but Kingsley, my tax professional, is the one that prepares everything for the CPA. But I found that interesting that you would, I forgot that you were a CPA.
So here's two other things that I would tell you. So most accounting departments are failing the organizations. And you've got to be really careful who you're depending on for what, as you're mentioning that. So most accountants, which I was not great at, was making sure your score is kept according to generally accepted accounting principles.
Yeah.
What they're usually not good at is giving you the management information to help you make better decisions. And that's what's really important. And usually they're all complicated and they want to take you through all the details. And what you really need to know is, my revenue per employee growing? Is my profit per employee growing, or is it shrinking? Because I don't care if my revenue is growing if those are shrinking, because that means for every dollar I'm adding, I'm losing. I'm going backwards.
Yep.
and it should be growing. And so there's simple ratios that people could be using that would be critical. And the number one thing that I want to share with people is, if you're going to look at almost every business's income statement, because I've seen thousands of them, all these different companies and stuff that they look at every quarter, usually 60 to 70% or more of all your expenses, and the most controllable expense on your income statement is people. Now, what's interesting is people get so caught up on what I'm paying in payroll that they forget that these are all contributors to your making money. And so what I want to increase is the multiplier for every dollar I spend in payroll. So I want to double my payroll, but I want to do that because I'm going to increase my multiple.
Yeah.
And so I'm always going to add people, and I'm going to add the right people, because when you hire right, you're going to get 2 to 3 times the production as you do an average person. And too many people are getting too comfortable with average. Average sucks.
Mm-hmm.
All right.
Yeah.
And so the better we can get at that, you're going to see your numbers, top line, bottom line, everything change the better you get at filling those seats.
I read a thing, and I was going to talk about this, and so I don't have my notes, but I read it. It was Walmart versus Costco. Have you ever seen that comparison?
I actually did that at our presentation.
Oh, did you? Okay.
Yes, that
Maybe
was
that's
me.
where I saw it then.
That's where you
Uh,
saw it. So, and we
yeah.
do
So
a
it was
lot of
like,
data like that.
so yeah. So tell us about that, because I don't want to butcher it, but it was Walmart's average employee made how much, or how much was the average cost of employee for
So
Walmart?
first of all, the average cost of an employee, when you compare Walmart to Costco, Walmart pays about 66% more, but their revenue per square foot is, and now I don't have the numbers in front of me, but it's like 3 to 4 times the revenue per square foot, and their profit is far higher as well. And the key though is if you look at this, they're paying more, and their turnover is like half of Walmart's. So they're just growing like gangbusters and making tons of more money compared to Walmart.
Yeah. So Costco pays more, a lot more, has half the turnover, and they have 4 to 5 times more output of the employees, and then they may just make more money. And so that's what we do at my companies. We pay, I've always had this philosophy where I pay as much as I can possibly pay that employee, not as little as I can get away with. And that's why I've never been a big guy on minimum wage. I've never in my entire life ever paid anybody minimum wage, but we won't even get into that right now. So, but
Oh,
speaking of paying people and businesses going out of business, um, tell me how you have leveraged credit, whether it's your personal life, your business life, or even both. So, how have you leveraged credit for both of those areas of your life?
well, so what's really important for all of us is we all need what I'd like to call a fortress balance sheet. And we've got to leverage that balance sheet in different ways. So what I
A
mean by that,
fortress balance sheet.
fortress balance, I want a fortress
That's
balance sheet,
that's a
because
great
when I have
name.
a fortress balance sheet, then I don't have to miss out on any opportunities that I really want to go after. All right. I don't have to make stupid decisions because my cash flow is so tight that I can't make the right decisions for my customers, and for our employees and everyone, because I cut my balance sheet too tight. So where I've used debt is I've always had, lines of credit. So by the way, this, the best time to get, lines of credit and all of that is when you have money and you don't need it. The minute
Exactly.
you need it, you can't get the money. So I've always gotten as much as I can, as early as I can, and build that up just in case I need it. And like all of us, all of a sudden we have moments, we have COVID moments, we have all this other stuff. We can keep clicking along while everyone else is cutting corners. So for example, while a lot of people in my industry suffered, I doubled and I tripled up on advertising. I had the balance sheet. I didn't let anybody go. I made sure that I made everybody whole. We were very, very strategic, but I couldn't do that without leveraging credit. And leveraging credit I've used to, make investments. So if I have, let's say I can get a line of credit for 5%, and then, Rondi comes along and says, listen, Howard, let's do this real estate transaction together, and I'm going to give you a 8 or a 10% coupon, and then we're going to make money in the back end. Well, now I'm making money on the spread.
Yep, you're
So you
arbitraging
just
it.
have to be smart in how you use credit and don't over leverage yourself in. So this is a bad move, I think, for a lot of business owners. So you have a bad business model. So then you use credit to keep perpetuating a bad business
Yeah.
model. So I only like to use credit in situations where I know my money comes back. So you own a house. So on the personal side, you know, me and my wife are in a battle right now because I'm getting close to 60 and she's to the point where why do we have a mortgage? I don't want to have a mortgage anymore. I just want the comfort. I'm like, have all that money locked up. I'm still going to earn the same amount in the house. Interest rates right now are below, 3%.
Yeah.
For me, it's
Two and a
it's
quarter.
insane to have no mortgage.
Mm-hmm. Yeah, I think that's something that, and it's weird. I have a couple different crowds of people that I hang out with. You got the Grant Cardones that just leverage everything,
Yeah, that's
and the
not me.
Robert Kiyosaki's, and then my friend and business partner Ed Milet, who uses zero debt. He's worth $400 million. That would be worth billions of dollars if he would leverage debt. But and you got that extreme, and then the whole mortgage thing. When I talk with people every day, and they're paying extra on their mortgage. I'm like, why are you trying to pay off your mortgage on a 2.25? My future son-in-law, he just refinanced his house in Vegas, 2.25% interest. Like, and he's like, I'm going to make extra payments. I'm like, no, you are not. You're going to take that money and we're going to invest that in one of my apartment complexes or one of our real estate flips that I do with Ivan. That money's so cheap. I mean, inflation is 3 to 4%. It's free money. It really is. And yes, I know some people get that they lose sleep and they get anxious over debt, but there's good debt and then there's bad debt. Like the equipment that I leased, I have enough cash I could have wrote a check for all of that equipment, but I'm leasing it at a relatively low cost, and so I'm leveraging that money. And now that instead of me giving it to the lease, it's sitting in a money market account to where I can access it for payroll, like you were talking. I can pivot very quickly and I can use that. So I encourage people all the time, if they're a business owner, the first thing you want to start doing is building your business credit so you can get lines of credit with that business. And then you have multiple bank accounts. I had Kingsley ask me this a couple of years ago. He's like, why do you have 12 bank accounts, like at 12 different banks? And he said that I have never seen anybody use multiple different banks. It's because I had lines of credit with every single bank. And what happens is when that business banker leaves one bank, they go to another. You're their first call. Hey, I was with Wells Fargo. I'm now with Bank of America. You want a line of credit? Yeah, I don't need it, but sure, I'll take another $100,000 line. And so you can leverage that credit. So what
Well,
is
and
what's
go
you
ahead.
agree with that?
I do. It's really interesting for the people that are listening. So banks change their policies and sometimes sour on certain industries during certain times, and many times when they start doing that, that's when the hit the fan, and you're not going to be able to go out and find another line of credit when it hit the fan. So by spreading that out, you've now because all banks look at credit differently depending on industries, their knowledge of the industry, and all of that. You're protecting yourself now from a bank. And I've had this happen in a business I own where all of a sudden the bank's like, listen, I don't love your industry anymore, and we're like,
Yeah.
well, you can't take that away right now. And I learned a really, really important lesson from that
Yeah, I've had
experience.
that. 2017, I lost all my merchant accounts. Every single one of them shut down.
So
And
something that happened to me that I'll share with the audience, because believe me, I don't want to paint the picture that I'm perfect. I have screwed up a lot, probably a lot more than I ever want anybody to know. But one time, actually, I think it was last year, through estate planning, our attorney was like, "Listen, you need to set up a holding company. All of this for my wife to be able to share and stuff." And I do have multiple companies. I have the book
yeah,
company, the intellectual capital company. We have our real estate investments, all of that, in another place. So we came up with a strategy to do it. Well, when we did all of this, one decision we made is, well, I want other people to own Activate Group. I want to be able to sell this thing. So I was an S corp. I got bad advice early on in my life that to be an S corp, and then that messes certain things up. I'm not going to get into that detail now. So my attorney's like, listen, we got to move you to an LLC to make all of this work. But something my attorney did that I don't want to happen to anybody else is, as soon as we set up the new LLC, he turned off the S corp. Well, what do you think happened to my business credit?
Yeah, you can't do that.
I didn't have any, right?
I
So
know.
from this guy actually filing this on my behalf without asking me, closes this thing all of a sudden from one day to the next. Now the bank's like, well, Activate Group doesn't exist anymore.
Yeah.
I'm like, holy crap.
Now
So
you start all
if you
over.
switch over from an LLC, S Corp to LLC, or vice versa, know that as soon as you get a new EIN, you have no business credit anymore.
Yep.
Yeah,
That's
I had bank relationships, so another bank just scooped me up real quick, and
yeah.
but it didn't. My interest rate went up, and I was super pissed, and that was to me it was a rookie move, but a lot of people will make that mistake.
Yeah, I see that a lot, actually. Because we have the business credit division, so we see that a lot, and it's really unfortunate. Tell me about a credit horror story.
Well, guys, the credit horror story is my dad.
Okay.
So growing up, my dad always had successful businesses, but no matter how successful he could be, he could outspend anybody I knew. So he'd get the $1 zillion boat and just want to flash stuff around people that he didn't have. So he always far extended to the point where when we were up in New York, we had to get messed up with it. He got messed up with the mob. I mean, all kinds of stuff. So I've been through that journey. So we had to leave New York because of his problems with the mob and the other stuff. Came down to Florida. And do you think he learned his lesson? Hell no. So now he gets into trouble again. And then worse, he stops paying his taxes with the IRS and all of that.
Oh.
So I've actually been in the building where I'm like walking, people around to try to help justify my dad's deductions for home office and all this other stuff that was a bunch of crap. And I just watching all of that. And I think that's why I'm not like the Grant Cardone side. I'm more like in the middle. I want to make sure it's smart debt, because I watched my dad just continue all the way to the point where he almost did it a third time. So this was back when I was starting to become an entrepreneur again. I decided those big companies didn't work. I go out and I said, let me look at your books, let me look at stuff. And I figured out that within 90 days, he was going to be bankrupt, between personal and business. He had no idea. He was so used to leveraging everything and pushing everything to the envelope and just loving life that I'm like, you're going to go through this again. And actually the best story out of that, I think that happened was, we were able to go back. You were talking about how to cut off equipment. He had spent tons of money. Printing equipment is super, super expensive. Those big presses, ton of money. Well, we went back to every one of those vendors and said, listen, we're ready to just give you this equipment back. And they were like, well, we don't want it back. At the time, the industry was suffering and still suffers. Those equipment manufacturers can't move enough equipment. Sending it back's a disaster. So I talked to my dad. I'm like, listen, they still need you. They want you to buy consumables. So you can give them a choice. Just come pick up the equipment because we're not going to pay a dime, or write off all the debt and but we'll keep buying the consumables. Every one of the vendors bought into that. And that was one of the main reasons. So then we had a business that was debt free. And we prepared his exit strategy, and we were able to sell it for far more. He had free equipment that people could just take over.
Wow. Well, I could spend all day talking to you, Howard, and I really appreciate the fact you come on the show. If someone wants to reach out to you, where do they find you?
Well, we have a website like everybody else at activategroupinc.com, or just pick up the phone and call me, 305-722-7213, and we'll make sure somebody gets on the phone and, helps out.
So activategroupinc.com. And then social media. Are you on social media anywhere?
I am everywhere. I'm on LinkedIn. I got a huge following on LinkedIn. We do Facebook, we do Twitter, we do Instagram, all that kind of stuff. So Howard M. Shore is really the brand that I'm known for. I even have my own personal website, but on LinkedIn, I'm Howard M. Shore. Would love to connect with people.
All right. So, and then on the books, they can go to Amazon as well and type in Howard M. Shore
Yeah.
and buy your books. I'm
And
definitely going to get the.
any book publisher, is carrying our books right now. We killed it. So right now we're everywhere. And the M is important because I don't know if you know this, Rondi, but there's a Howard Shore that does all the Lord of the Rings movies and all of that.
Yeah.
So to get on the top of a search engine as Howard Shore, I'm dead. So
Yeah.
I still get people on my Twitter that thank me for doing such great movies.
Yeah. That's great. All right, Howard, thank you so much. I look forward to seeing you in February in
Yes,
Sarasota.
it's be awesome. I appreciate
And
you and all you do for our community, and your knowledge is just amazing. Anybody that's listening to this that hasn't come to his company with credit, you're out of your mind. No one knows more about credit than Rondi.
I appreciate that so much. Have a great day.
Hey, take care.